So you're welcome back. Now let's continue from where we stopped in the previous video. Remember that we have determined the non-controlling interest as well as the consolidated retained earnings and the goodwill. Now we want to prepare the consolidated statement of profit or loss as well as the consolidated statement of financial position as required in the question. So let's prepare the consolidated statement of profit or loss of Unitarization PLC. For the year ended October 31st, 2014. And I have my Naira value. Okay, so we are going to go to the question and start picking the figures one by each. Then we'll transfer the consolidated amount into the consolidated statement of profit or loss. So let's go to the question. Okay, the first item here is the revenue. And for unitarization, the revenue was 51,000. For Famous, it was 25,200. However, what we consolidate for Famous is the post-acquisition amount. Remember that this is an acquisition during the year. We acquired the subsidiary during the year on 1st May 2014. And we are consolidating on 31st October 2014. So the consolidation period will only be 6 months for the statement of profit or loss. So let's take the post-acquisition portion of this 25,200. And that will be 25,200 multiplied by 6/12, which is the same thing as saying divided by 2. Do you get? And that will be 12,600. And that 12,600, you add it to the revenue of the parent company. So I will add 51,000. And the addition of the 2 gives me 63,600. Remember that there was a consolidation adjustment during the year where there was an intragroup sales of goods. So we had an intragroup sales of goods. And we said, this intragroup sales of goods, in the statement of profit or loss, we are going to deduct it from sales. Okay, and we're going to deduct it from cost of sales. So let's deduct the sales amount from the sales, which is this 4,800. So if you deduct 4,800, we'll be left with 58,800. And it is that 58,800 that we are going to consolidate. So let's transfer the amount to the consolidated statement of profit or loss. So what are we looking at? That's my revenue. The revenue will be 58,800. Okay, the next figure will be the cost of sales. So let's go to the question so that we can extract the figures for the cost of sales. So for the cost of sales, for unitarization was 37,800 and for Famous was 19,200. So the post-acquisition portion for Famous will be 19,200 divided by 2. And that gives us 9,600. We'll add it to that of Famous, which is 3,600. No. 19,200 divided by 2. We'll add it to that of unitarization, which is 37,800, and the addition of the two gives me 47,400. Now, let's add and deduct the consolidation adjustment to the cost of sales. And the very obvious one would be the intragroup sales. Okay. We said we'll deduct the intragroup sales from the cost of sales. So let me deduct 4,800. If I deduct 4,800, I'll be left with 42,600. Then, we said the unrealized profits will also be added to the cost of sales. And we'll determine the unrealized profits here as 480 million. So we're going to add the unrealized profits to the cost of sales of 480 million. Then I'll be left with 43,080. So 43,080 is what I will transfer to the consolidated statement of profit or loss. However, the additional depreciation, if the question had told us that we should add it to the cost of sales, then we'll have added it to the cost of sales. Because they will give you that information in the additional notes, and that was workings. That will be workings what? That will be workings 6, I guess. No, it was workings 4. Okay. In that workings 4, they didn't specify where we should treat the depreciation. They just told us the depreciation method. Okay. So let's go on. We won't touch the depreciation now. We are going to add the depreciation to administrative expenses. So the cost of sales, as we have determined, will be 43,080. Therefore, our gross profit will be 58,800 minus 43,080. 58,800 minus 43,080. That gives me 15,720. That's the gross profit. So let's go back to the question and pick the next figure. And the next figure here is my distribution cost. That of unitarization was 1,800, 1,200 I mean, and that of famous was also 1,200. So the post-acquisition amount for famous will be 1,200 multiplied by 6 over 12. That gives 600. You add it to that of unitarization, which is 1,200. The addition of the two gives us 1,800. So my distribution cost is 1,800. Let me transfer it. That's my distribution cost. So the distribution cost is how much? 1,800. Okay. Let me roll my line properly. So, okay. So let me go back to the question and pick the next amount. So, in my question, the next amount here is the administrative expenses. That of unitarization was 3,600. That of famous was 1,920. So let's get the post-acquisition figures for famous. That is 1,020 divided by 2. That's 960. If you add the 3,600, that gives me 4,560. And the consolidation adjustment that will be added to the administrative expenses will of course be the additional depreciation. The additional depreciation that we got as 120 million. So I will add here 120 million. Okay. And that's the only additional information that will affect the administrative expenses. If I add 120 million, I will get 4,680. So let me have my administrative expenses. And that was 4,680. So let me go back to the question and pick the next amount. So in the question, the next amount there is the finance cost. And for unitarization, it was 180. For Famous, it was 240. The post-acquisition amount for Famous will be 240 multiplied by 6 over 12. That gives 120. If I add the 180, I will get 300. So let me go and insert my finance cost into my consolidated statement of profit or loss. So I will have my finance cost. And my finance cost was 300. Therefore, I will get my profit before tax. Let me shift this amount forward. My profit before tax, that will be my gross profit, which is this. Then I will deduct these three amounts from it. So that will be 15,720 minus 1,800 minus 4,680 minus 300. Then that gives me 8,940. Now I have here 8,940. Now from there, I'll deduct income tax expense. Income tax expense. Then I go back to the question to pick up my income tax expense. And from the question, my income tax expense, which is this, for unitarization was 2,820. For Famous was 840. And the post-acquisition amount for Famous will be 840 divided by 2. That gives me 420. Then I will add it to that of unitarization, which is 2,820. The addition of the two gives me 3,240. So let me transfer it. So the income tax expense will be 3,240. Then I will get my profit for the year as 8,940 minus 3,240. So what do I get? I get 5,700. Now this 5,700 is the group profit, which should be shared between the owners of the parent and the non-controlling interest. Okay. So I will get the profit for the year, the profit attributable to first the owners of parent and the non-controlling interest. You must always determine that of non-controlling interest first. Then you will get that relating to owners of parent as the balancing figure. So let's get the profit attributable to non-controlling interest. Recall that the non-controlling interest has 40%. Please don't ever apply the 40% on the group profit. This is group profit. The profit of the parent and the subsidiary. NCI will only take a share of the profit of the subsidiary. So what is the profit of the subsidiary? You will get that from the statement of profit or loss. And from the statement of profit or loss, the profit of the subsidiary was 1,800. However, the non-controlling interest acquired the subsidiary, at least his own 40%, at 1st May also. Because that was when NCI arise, when we had controlling interest. Now, this NCI will only take 6 months share because he also had 40% at 1st May. And this is 31st October. So from 1st May to 31st October is 6 months period. So we're going to prorate this 1,800 by 6 months. That gives us 900. And that 900, we're going to adjust it for certain consolidation adjustments that will have affected the items here of the item of the subsidiary, any of these items, but which has not been reflected in the correction. But we have worked them out. And the major items are, one is the additional depreciation, because the additional depreciation was on the asset of the subsidiary and it was 120. So we need to deduct that 120 from the 900 first. We'll be left with 780. And also, apart from the additional depreciation, also you need to adjust for the unrealized profit. The unrealized profit of 480. So we're going to deduct 480. When we deduct 480, we'll be left with 300. So it is this 300 that NCI will take a portion from. So we're going to do 40% on 300. Is that okay? 40% of what? Of 300. So if we do 40% of 300, that gives me 120. So if I get 120 as the profit attributable to the non-controlling interest, so the owners of parent will take the balancing figure of 5,580. So we'll have here 5,580 then is well. So we have prepared the consolidated statement of profit or loss. Let's prepare the consolidated statement of financial position in the next video. So thank you very much, guys. I'll see you in the next video.